Welcome back to Fast Market here on the TD Ameritrade Network. Let's bring in our next guest for our cash tag segment. That's going to be Landon Swan, the co-founder at Likefolio. Welcome back to the show, Landon.
Thank you, Tom. Good to be here.
All right, so we're talking used cars, CarMax. I mean, this stock over the last 2 years has been pretty volatile. All-time highs of 155. It hit 52 bucks a share. It's been as volatile as the auto market has been over the last 2 years, Landon. What kind of data do you guys have out of Likefolio?
Yeah, I mean, it totally makes sense, right? I mean, that's their inventory, and normally this asset is just a slowly depreciating asset, but when COVID hit, all of a sudden things went crazy and used cars went up, and so their earnings, their whole inventory is all of a sudden worth more, and everything's kind of, the playbook is thrown out the window. So they're making money on holding cars. It's a pretty wild situation. I don't think we've ever seen that before. And you talk about the stock. If you guys have a 3-year chart, it's pretty cool. I mean, this stock has got, like you said, it got up to about 150, and then it broke under 80 in September for the first time, and it's kind of bounced around between 50 and 80 in that time. And now we're back up to that 80 level and maybe looking to break through. So it's either, you see it as resistance, or maybe if you break through, then it'll become support. But we're trading just under 80 right now. And overall in the used car market, you can see here, this is the consumer price index for used cars. Pretty steady before COVID, and you can see COVID highlighted in there in that March 2020 area, and it just has gone crazy. What's really interesting is, yes, it did peak in around January of 2022, and it's been falling. But over the last 2 months, used car prices have actually increased about 10%. So again, this is what they're holding. Now they're able to charge more for all of these assets on their lot. Obviously, a positive thing for CarMax. It has been declining, but we get this bump right now. I think that's really good. Last quarter, they reported a very strong report. Their stock bumped up about 10%. Their EPS almost doubled, and they had a bump in gross margin, so they're doing really well there. And what I like to kind of compare them to is Carvana, because Carvana's really been going through some wild stuff lately. I mean, if they had the attack, there's a fund that sort of targeted them on a short sale, and then it became a short squeeze, which is the opposite of what that fund wanted. Their stock went from 7 to 25 now. But when we look at the actual data, what's the stronger company? We look at either happiness or purchase intent. You can see either one of those. CarMax is beating Carvana handily. In fact, if you look at AutoNation, CarMax, and Carvana on a purchase intent scale or consumer happiness, AutoNation is the top here. It's by far the leader when it comes to happiness at 85%, CarMax 63%, and Carvana down at 54%. Even when you look at purchase intent, though, AutoNation and CarMax are both very positive when you look at a month-over-month, quarter-over-quarter. This is actually the chart that we've got for you guys, is the quarter-over-quarter chart. Carvana's losing. It's down about 50% on that period, and AutoNation and CarMax are up about 20-30% each. So CarMax is definitely taking advantage of this better than Carvana. Not quite as good as AutoNation. AutoNation is doing better, but there's a lot of factors going into play. It's not just used car prices. It's the Fed not raising rates, so that lowers payments if you're going to be buying buy a used car. But overall, I think that CarMax's pitch is resonating with consumers. They've got a very large selection of vehicles. The customers love their return policy, their warranty. I mean, when was the last time you heard of a car company that had a return policy? It's very cool. You can also go there to sell a car. They'll give you a price, and you can come back within 7 days. And they also love the no haggle pricing. So there's a lot of things that people just like about CarMax. And all the metrics that we see, they're doing fairly well. And based on the stock kind of bumping up against that support, or that resistance maybe turns support, I like the potential for a breakthrough on 80 here.
Landon, this is a fascinating story, and here's why. I think I'm going to make a statement. You tell me where I'm wrong here. Some companies like volatility, right? You would have thought that these used car companies would have done extremely well during the pandemic and post-pandemic when used cars were so popular. But CarMax didn't do well. They did horribly because it appears they had trouble pricing the cars. And I think this company prefers a stable auto market to a volatile one like we're coming out of. So I think this stock suffered during that because, frankly, CarMax suffered during that. They're so much better than Carvana right? Carvana, number one, they're brick and mortar. Carvana is a vending machine. I don't know what the heck they're doing there, but this company seems to do extremely well when the used car market is more stable and more predictable. Now, in terms of, you made a good point. The CPI for used cars, if you look inside the data, 2 months in a row, used car prices were up 4.4%. I think this company long-term can go back to where it was, because if you look at a long-term chart, they're incredibly profitable in the past. They want this market to simmer down so they can get back to doing what they do right. Tell me where I'm wrong, Landon.
I think you got it exactly right. I mean, yes, if used car prices go up, all your inventory goes up. But that's short-term thinking. Long-term, they've got their system, right? They know exactly how much a car is worth and what they'll offer and then what they can sell it for, how much it's going to depreciate. They've got their formulas down, and it's supposed to just slowly depreciate over time. Like, that's what cars have done forever. Except for the first day you drive off the lot, it goes down a lot. But then after that, it's nice and slow, and they're in the used car business, so it should be nice and slow depreciation. They've got their system. They've got their methodology. They don't want wrenches in the works. And I think that's what you're talking about. When these used car prices are going crazy up and down, then all of a sudden, they could find themselves in a position where they buy a car and turn around and sell it a week or two later and lose money on it. And they've never done that before, right? Because they know exactly what they're doing. So I agree. The volatility is not great for them. It's probably very challenging. I'm sure it presented some opportunities, but I am certain that they would prefer steady prices and just back to business as usual. As an investor of CarMax, I would certainly prefer that.
When you look at those happiness levels, it seems like right in the middle of AutoNation. That's kind of more of a regional play there, Landon. So I don't really pay attention to that. But then you've got all the competitors that came in during the pandemic too. You got Vroom, Carvana. Carvana, a lot of debt on their sheets.
They're running out of cash.
Yeah, they're burning through cash, right? They need probably an injection at this point. Short squeeze taking place in that stock across the board. But when you look at the happiness levels and the business and the number of cars sold on a yearly basis, you look at this and you say, okay, our earnings score is what, and it makes sense.
Yeah, so I mean, I think that long term we're probably pretty positive on this one. Again, to Kevin's point, we want it to calm down, the used car prices to calm down. But going into this earnings report, we're at a plus 38, so firmly in the bullish category, ready to take a bet on that side. And then, just like I said, I think that if you can get over 80 as a long-term investor, that could be the running point to maybe up into triple digits again, where it was not too long ago. So, like Folio's, plus 38, firmly bullish going into this one.
All right, great stuff. And you made that point. Last quarter, they surprised to the upside.
Yeah.
The stock had a nice little run off of that also. All right, Landon, thanks. Appreciate it.
Thanks, guys. Take care.
All right, that's Landon.